And last, and certainly not least, maybe we saved the best for last, but Howard Johnson, TechnoTrader. Howard is a personal friend. I really like Howard. He's a great technician. I actually have been into their what I call the TechnoTrader Ranch, but their studios that they have in Seattle. He's a great technician. We've done a lot of traveling together. One of the things that I really like about the TechnoTrader staff, well, they're all awesome. The TechnoTrader staff is awesome, but the TechnoTrader method is it's a very turnkey-based solution. So they have a very specific way of looking at stocks, a very specific approach, a very specific methodology, and they've done a great job of kind of packaging up a methodology that's really, really good, that kind of focuses on looking at a very wide range of stocks and then kind of narrowing it down to just a couple that are really, really good. And so without further ado, let's kind of bring you online. Howard, are you with us? Maybe we'll bring him online. Howard? Well, let's turn on his mic, see what happens. Howard?
Yep, I think you got me now.
I muted you because you were coughing.
Oh, there you go. I can't be coughing.
Somebody asked who coughed, and they blamed it on me, but it was you. So, in any case, how are you doing today?
Well, I'm doing great, Jeff. I hope you and the audience are doing well.
Yeah, we are. There's been a lot of people that have been here for a while today. I forgot to mention your tractor when I was talking about you.
Oh, I got to get around to teaching you how to do a little farming with it.
Yeah. Anyway, what do you want to tell us about yourself?
Well, let me get into that in a moment. I've got a. Can you see my slide?
No, not yet. I'm going to turn the presentation over to you. It's going to pop up and ask you if you want to share your screen. Okay. I'm not going to let you go until I tell you I can see your screen.
Can you see my screen?
I can see your screen.
Great.
So it's coming through. It looks good. I'll get out of your way.
All right. Let me move this thing here so that I can see my screen. Hi, everyone. We're going to talk about relational analysis, and we're going to go through the actual steps to be a successful trader. Our little disclaimer, I'm not going to spend a lot of time on this because, frankly, it's going to be like standing in front of a water hose. There's an awful lot of material to cover and not a lot of time to do it. I would suggest that if you have a paper and a pencil, that you grab it and have it at handy because you will probably want to make some notes. Let's talk about our track record. Since 1998, almost 18 years ago, we've been teaching students how to trade successfully. We have thousands of students all over the world in over 40 different countries. The minimum success level that our students need to achieve before they begin live trading is 75% rate. And many of our students are in the upper to low 90% level. Well, what does that mean? It means that 7 to 8 out of 10 trades are profitable with 2 to 3 minimal losses. Many of you are going to be very doubtful at this point. I'll be proving my point. You're about to see why our students achieve these goals. Today I'm going to teach you mandatory trading tools and skills that will change how you approach your trading. How to set specific profit targets, goals that meet your expectations. Frankly, I've been doing this for over 45 years. And if you don't set goals, you never will reach them. In my mind's eye, this is the most important step of trading. How to find at any given time those specific stocks and their corresponding options that have the greatest probability of meeting your trading profit targets. Doesn't matter whether you want to be an ETF trader or indices or whatever your lot in life is. You need to have the ability to find those that are going to make a move, how much that move is going to be, over what period of time. You must have predefined profit goals in place before ever placing any trades. You need to have a very methodical, step-by-step process that you go through each time you're looking for stocks and options or whatever your underlying security is that you want to trade. Since we have a very mixed group in the audience, from beginners to very advanced traders, I'll be covering the material from those different viewpoints. I'm going to get on my soapbox for a minute and talk about the realities of stock and options trading, and frankly, any instrument for that matter. Everyone hears all kinds of noise about learning to trade to make wealth instantly. And that's just nonsense. Putting on a trade or learning how to trade, that's the easy part. Learning how to buy and sell stocks or options, or again, whatever the underlying security is less than 10% of what you need to learn to be a successful trader. 90% of more of what you need to learn to be consistently profitable is the ability to quickly find only 1 to 3 stocks or their options that have a very high probability of meeting your profit targets. And that's what we're going to talk about today. This is not guesswork, but a trading process with a trading plan to reach your goals simply and efficiently. Unless you have a complete plan and process thoroughly written down in great detail, you're not ready to earn the profits you should be earning. The first step in creating your trading plan is to learn how to find and properly analyze your selections to end up with only a very few picks to trade. Well, let's just say I'm in the Amazon jungle. I'm a python, and I'm a big python. I've spent a lot of energy climbing up one of the boa trees and hanging out over a limb. Because of the energy and the size that I am, if a small prey comes through, I'm not going to waste the energy to drop down and snatch him up. I'm going to wait until a big fat warthog comes along. And that's the way you need to learn how to trade. And that's what we're going to talk about, is to find those warthogs of trading. Most of you have some trading experience. You've watched a lot of webinars, you've attended seminars, and you've read everything you can on trading. You have great charting software, MetaStock. You know all about candlestick charts. You know and are using all kinds of indicators. You're very familiar with buying and selling stocks and their options. So why aren't you making the kind of profits you deserve to make? It's because you don't have a professional trading plan that works. You need to learn where the holes are in your education. And there are far more than you know, and you'll see a few of those as we go through today. Today you'll see the required process of setting up the steps that give you the highest probability that you meet your personal goals. The education, the tools, and the experience. Let's take a moment and very quickly go through this because we're pressed with time. What gives us the credibility or the right to do this? Every person or professional person belongs to a governing body that regulates the activities of the professional. Testing and certifications. Attorneys, the American Bar Association. Doctors, the American Medical Association. CPAs, the American Institute of Accountants. And in the financial markets, it's the CMT, the Market Technicians Association. The CMT award is the only certification for technical analysis approved and recognized by the SEC, NYSE, and NASDAQ, and qualifies the awarded individual the analyst side of the Series 86 SEC Analyst Certification. Since the inception of the Market Technicians Association in 1973, which was over 40 years ago, approximately only 1,400 people worldwide have passed the exams required to earn the CMT certification, and there's a reason for this. Currently, only about 850 worldwide are working as a CMT. Most are employed by the banking investment industry and the buy-side or sell side of the markets. It's extremely rare for a trading individual to have access to a CMT, much less to be able to work with one. To earn the CMT certification, the CMT applicant must, before you can even apply, have 5 years of proven experience as a working financial market analyst. You must pass the Level 1 proctored written exam, which is a 4-hour written exam, pass the Level 2 proctored written exam after you've passed the Level 1, which is another 4-hour written exam. And in Martha's case, Martha wrote, contributing to the technical body of analysis, a publication of a doctoral style thesis called Cycle Evolution Theory. There's Martha's certification. This is just a small list of the body of work that Martha has contributed to the industry over the years. And I'm just going to quickly flash through this. It's pretty unbelievable. Martha is a paid writer for Stocks and Commodities magazine. This is just a few articles that she has published. Because we have our own high-definition videotape studio, we produce a large quantity of additional training materials that are available at no cost to our students on the student site. And this is just an example of some of those. I'm now going to move into the first part of what it takes to be a successful trader, and this is relational analysis. So kind of sit back and enjoy this and put this in perspective what it means to your own trading. Relational analysis is the evolution of chart analysis and interpretation beyond the basics of price, indicators, candlesticks, indices, and trend analysis. We're going beyond these things. Modern charting software offers more analytical tools, state-of-the-art hybrid indicators, and additional data which broadens the depth of analysis and the technical perspective. Whenever you can improve your analysis via your software tools, you will improve your ability to analyze and trade successfully, whether you're a beginner or a professional. The education and training presented today will help stock, option, E-minis, and other types of traders. It is the foundation of knowledge which 99% of all retail traders do not know, and many have never heard of before. It is how the professional side trades. The professional side, the institutions, control 80% of all the financial market activity, capital, and information resources. The retail traders just don't have access to the kind of information that the professional side has. Therefore, understanding how they trade is crucial to your success. If 80% of the money is going here, you need to know where it's going and why. Imagine driving at night in the fog and you're wearing sunglasses. Your perception of what's going on driving in those conditions would be completely off. And that's what's happening with most retail traders when they're trying to do their analysis. The vehicles in the fog include a log truck driver late for delivery, a heavily loaded semi-truck, a Jaguar, a motorcycle, two bicyclists trying to cross traffic, several teenagers in a car, and weary commuters who are eager to get home. With the fog and sunglasses, it is impossible to see them, judge their speed, purpose, or emotional mood accurately. You're trying to do your analysis. You're trying to figure out what securities to trade, stocks, options, indices. If you took off the sunglasses, turned on fog-piercing headlights, and focused on all the vehicles around you, your ability to successfully navigate congested areas increases. The conditions just mentioned are very similar to what technical traders experience while trading the modern automated marketplace. You can't actually see the other buyers and sellers, and without some understanding of who is buying and who is selling, risk increases. Relational analysis pierces the fog surrounding the entire market. You can begin to see the clarification that happens. This adds clarity to the analysis regardless of the trading instrument. When traders learn technical analysis, they learn basic trend patterns, topping formations, bottom formations, and so on. However, that's not learning how to use that knowledge in the modern market structure for highly profitable trading. Not only must you learn the patterns of technical analysis, you must understand the relationship between different patterns. Just learning to identify an engulfing white candle is not enough. Where that candle forms, what candles preceded it, where it is in the overall trend in relation to the intent of the trade, and how it relates to indicators that reveal dark pool activity and high-frequency trader trigger activity is crucial to truly using technical analysis properly and successfully. Relational analysis takes into consideration far more data from the chart and includes more data analysis. This allows the technical trader to understand who controls price, which in turn provides superior indication of how price will behave in the near term. Market condition analysis is TechnoTrader's proprietary professional relational analysis of the conditions present at the time of trading. It includes quantitative formulas which reveal whether dark pools are active or not, and whether the market is entering a momentum mode, a platforming mode, insipid, or a void. Now you're about to learn some new things. Voids are becoming more common nowadays, as so many of the giant lot institutions control when their orders trigger. Market voids are extremely high-risk conditions which are not visible in index action, news, or other market indicators due to the type of order and venues giant funds now use. Many technical traders believe that the market has only three types of price action. Market goes up, the market goes sideways, the market goes down. Wrong. There are 6 market conditions: bottoming markets, platform markets, moderately trending up or down, velocity up or down, trading range, topping. 4 of these conditions are sideways patterns. Each sideways price action is different and unique to that particular market condition. Moderately trending and velocity are trending markets for both up and down. The automated marketplace trends sideways about 70% of the time. Now I know for a lot of traders that are out there, we're starting to get pretty heavy. Don't worry about it. It's all going to come together in a very few minutes. Downside price action is very different than upside due to the lower number of market participants groups actively trading the downside market or selling short. When Charles Dow wrote Dow theory many years ago, there were only 3 market participant groups. Today there are 9, and any of those 9 can control the price of the security that you're trying to trade. And you need to know who's in the security and what their intentions are. So market condition analysis tells you who's in control of price, what candle patterns are prevalent and reliable, what indicators to use, how price will behave, resistance and support, what trading styles work best, the inherent risk in trading specific styles, and you must know all of these things if you're going to reach the kind of profitability that you can do. What trendline patterns are common? What entry and exit signals are most reliable? The strength of price and volume patterns. So let's take an example of current market condition. Martha publishes a report every morning and every afternoon. So for those folks that are early morning traders, she's up at 3 o'clock Pacific Standard Time every morning, every trading day, analyzing the markets and publishing a report of what the open is going to be. And then she's also writing a report at the end of the day's close for swing traders, position traders that are holding for a longer period of time, what the anticipated markets will do. Bottoming market condition with underlying momentum energy. Who controls price? Institutional investors, dark pools. 80% of the money is right here. How price is behaving. Indices are lagging. Underlying stocks are leading. Shift of sentiment sudden at bottom lows with momentum and velocity moves. Trading styles to use. Day, swing, and position. Indicators to use. Quiet accumulation to identify the shift of sentiment. Volume indicators, flow of funds, and momentum. Entry signals, springboards, pole vaults, hurdles, morning stars, engulfing whites, and resting day candlesticks. Support and resistance, initial bottom highs, resistance easily pushed through, yearly highs are strong resistance. Who you're trading with, dark pools accumulating, followed by professional traders, followed by HFTs, then VWAP, smaller funds, volume weighted at price orders. Who you're trading against, uninformed retail traders, panicking independent investors, HFTs selling down, and smaller funds capitulation. In other words, market condition analysis tells you how and when to trade, who's controlling price, what to expect in the near-term price action, where to find excellent picks, how to enter, and when to exit. Market condition analysis is a roadmap of which market participants are actively trading, which are sidelined or waiting, and where we're at in the overall long-term, intermediate-term, and short-term trend. This provides the relational analysis needed to navigate the complex automated marketplace. Market condition analysis is incorporated into your MetaStock charting software when you become a TechnoTrader chartered student. Dark pools are used by the giant and large institutions who control $90 trillion in assets worldwide. Everybody's so worried about our national debt at, about 14 trillion? The dark pools are controlling $90 trillion. Where they go, we must go. When they're going into a security, we go in with them. When they get out of the security, we're leaving it. Dark pools are off exchange, over-the-counter orders on alternate trading platforms. There's over 40 different dark pool exchanges. Their activity is not included in your charting software during the day. But since every order has to be cleared by law at the end of the day through the clearing houses that accumulate the exchange data, the analysis is after the market closes to find out for the next day's trading or next few days trading where the large funds are moving. And why this is important is that when the dark pools move in, they move in slowly over a long period of time so as not to disturb price and not let other folks know that they're moving in. But we have an indicator that tracks dark pool activity, our quiet accumulation indicator. And we'll be talking more about that in a few minutes. This provides two benefits to the giant fund and the reason that they're not trading on the open exchanges. The ability to control their impact on price when buying or selling large lots, and to avoid the HFTs from front running that is common in the stock exchanges. Their controlled bracketed orders trigger automatically over time, creating a consistent price action. Relational analysis reveals their activity. HFTs currently control around 50% of the exchange order flow. These companies trade on the millisecond scale, trading 1,000 to 3,000 times a second or 60,000 times a minute. They have been under SEC scrutiny in the last few years due to technical problems for their role as market takers for the exchanges. HFTs claim they provide liquidity to the exchanges, acting as market makers. Unlike market makers, maker takers are not required to provide liquidity. This is just a little additional information for you very experienced traders. I told you I'd be giving you several different viewpoints here. Again, we will do a summary. They are paid rebates on order flow by the exchanges. The intent of indicators, let's talk about indicators, is to speed up your stock pick analysis. Unfortunately, all too often what happens is just the opposite. You spend more time rather than less time trying to figure out what stock is going to be the best for your particular trading style and goals. This leads to frustration and often a huge waste of time. Time's money, especially if you're trading for extra income or if you're a semi-professional trader, a career trader, or someone that's doing this as a business. The more efficiently you use your indicators, the more value they will have for your trading. And we're going to specifically see some applications in a little bit. In order to use any indicator properly, you must understand what analysis the indicator was designed to reveal. When MACD was developed many years ago, the market was moderately trending up. And MACD at that time worked moderately well for moderately uptrending markets. Well, since there's 6 different market conditions, 75% of the time, MACD will give you reversals, and you will be whipsawed out. The indicator category. What data is used in the formula? What market condition was underway at the time the indicator was written and the intent of the writer? The limitations of the indicator, whether it's for intraday, short-term, or long-term analysis. What patterns form with that indicator and what each means. Under what trading conditions does it work ideally? What subordinate indicators to use with the indicator, if any? Whether it's a leading or a lagging indicator. There are only 3 pieces of data, as you've learned earlier, on the stock charts: price, time, and quantity. There are two pieces of data needed in order to create an indicator. Most of the indicators out there are based on price and time. But there's also quantity and time. Price and time indicators lag the event. Price has to move before the indicator will reflect it. And so they're of very little value. Quantity and time indicators sometimes lead, where they will actually lead price, and price will then catch up to the indicator. Price, time, and quantity indicators, however, lead most of the time. There's hundreds and hundreds of indicators out there. And we talk to very experienced traders all the time that are not reaching the success that they'd like to have. And we find out that they've got a bunch of indicators on their charts, but they don't realize that even though they got a bunch of different names, that the prime, the root indicator, what the original author wrote in the indicator, is the same for all the indicators they're using. So they're not getting a true look at what's happening. There are only 25 prime indicators. Everything else is a derivative. And if you're not using the primes and using them separately, all you're getting is redundant information. Stock charts contain the three pieces of data. There are many indicators. Most are based on moving averages. Again, we talked about MACD. I'm just going to skip through this. Let's talk about volume and time indicators. There are far fewer volume and quantity indicators because they were developed in the early days of technical analysis. Price was and often still is considered to be the most important analysis. However, this was before the automated market. Now orders are triggered automatically with more sophisticated order types, and complex variables are used. Many order types control the entry price over extended periods of time. This means quantity indicators and hybrid indicators are crucial for optimal trading success because dark pools control price without price movement. Price and time indicators do not reveal dark pool activity. 80% of market activity is not being tracked. Modern hybrid indicators combine all of the data into more complex formula with the use of subordinate indicators. Price, time, and quantity are calculated in such a way that the indicators actually lead price action most of the time, providing invaluable information for technical trading. Often uptick versus downtick quantity analysis is incorporated, which reveals the dark pool activity. These are the most sensitive indicators for today's electronic order flow, which is dominated and controlled by institutional investors, institutional traders, HFTs, and professional traders. Hybrid indicators are designed to lead price. In other words, the indicator signals in advance before price starts to move. Often this is several days ahead of price. TechnoTrader hybrid indicators, TTQA, volume bars, volume accumulation. And I'm just very quickly going to go through this because I'm fast running out of time. Our indicators designed specifically and solely for MetaStock took 2.5 years to design, write, test, tweak, including empirical evidence of functionality. 7 staff members and 2 programmers were involved in the creation. Different market conditions require different indicators, settings, periods, and subordinate indicators. As an example, using a price oscillator during a momentum market will signal an exit pattern just before the stock moves up with velocity. Setting up indicator templates for how you prefer to trade the different market conditions will not only improve your profits and lower your risk, but it will also speed up your analysis. Having all of your indicators preset for the market conditions is how professionals trade. Categories of stock indicators. very few folks really understand that you have trending indicators. You have velocity indicators. You have quality indicators. You have oscillators. You have accumulation distribution indicators. You have hybrids. You have cycle indicators. You have the sub-indicators. So which indicators you should use should be determined by your trading style. Whether you're swing trading, intraday trading, options trading, the current market condition, the hold time of the trade based on the trend line patterns, and the run gain potential calculations. We'll talk about explorations for a moment. You can see a few of the explorations or scans for potential opportunities that we have written that's embedded in the MetaStock platform. And I'm just going to very quickly go through this. So, relational analysis uses more data than traditional technical analysis, incorporating more information that can be studied and interpreted by the technical trader for more reliable results. Relational analysis works for all financial market instruments. However, the market participation cycle varies for each financial market. Market structural changes have made it necessary to not only study index action, but also the underlying stocks that are not index components. The buy-side institutions are currently searching for the next group of companies that will eventually grow and become the new generation of big blue chip stocks. Tracking the giant funds is easy for relational technical traders, as these large lot investors leave distinct footprints on the chart. HFT's front running can be avoided or used to a trader's advantage when they learn relational analysis, which exposes where HFSTs are most likely to trigger on short-term trades. Accepting new concepts and methodologies can at times be intimidating, but all technical traders need to adapt in order to succeed in this evolving market structure. So how do we take all of this gobbledygook and put it into something that we can use, and how do we do it easily? Well, the steps of building your trading plan. First thing is you gotta set some goals. So why on earth would anyone consider short-term trading? Why not just buy in stock and hold for the long-term gain? It's a whole lot easier. You advanced traders believe you have the answer to this question, and you're probably correct. However, even the most advanced traders will find new insights into increasing their profitability with the training I will now do. It's all in inventory turns. Your capital is your inventory, just like a retail store. A store needs to constantly be turning its inventory. A lawnmower dealer, if he only sold one lawnmower a year, he'd quickly be out of business, even if he made a large percentage. But say he made 30% on a lawnmower. If he sold a lawnmower every day of the year, he's got 30 times 365% return. You've got to treat stocks as an inventory, and you've got to turn it. And let's take a look why. A long-term investor may get 5% annual return on his inventory. A short-term trader trading his stock and options once a month instead of once a year would be looking to get 12 times 5% return, or 60% return a year. A weekly trader would have the possibility to turn his inventory once a week for a 52 times 5% gain of 260% a year. And frankly, the experienced trader does much more than this. Highly educated, skilled technical traders do much more. Recently, recently being about 5 months ago, we received an email from one of our students saying, folks, I'd like you to know that I started with $10,000, and a year later I'm up to 130,000. Here a couple of weeks ago, a trader coming in and saying, in the last 3 trades, one I made 7,000, another 9,000, and another 12,000. I'm not giving you high statistics. These kinds of things we get all of the time from our students. This is why short-term trading is becoming so popular. Obviously, this is just an example of the real reason why to short-term trade. Okay, what's going through your mind right now? Is this really doable? Well, let's find out. Before we begin any trading whatsoever, we must set our trading profit goals in advance for our style of trading. And we use the Trade Management Planner tool. You're going to see something or hear about something now that most of you are unaware of. On the professional side of the market, we managed many years ago a small closed-end fund as fund managers. We had to sit down with the board of directors once a year and set a yearly goal. We then broke it into quarterly goals. We then broke that down to monthly and finally down to daily goals. I was the day trader for the fund. Martha was the swing and position trader and long term. And we wouldn't even dream about trading or putting a trade on unless we had a finite, pre-established goal for what that trade had to accomplish, even intraday day trader. Let's go through the steps of how the Trade Management Planners works, what it can do. Many traders try for a couple of percent points on a trade. Doesn't matter what you're looking at, but that's not where you need to start. First, you must find out if such a percentage is actually possible, given several variables. We do get calls from somebody that's got $1,000 and they want to try to make $500,000 this next year. And we have to sit down and tell them that it's just not possible. The goals have to be realistic based on your style of trading and the amount of capital that you have to trade. And this is what the planner does. It shows you whether your goals are realistic or not. In a moment, you're going to be pretty surprised at what I'm going to show you. Most traders underestimate their true attainable goals. Just setting a minimum percentage gain per trade is not nearly enough. You need to know what specific ROI do you want to make each and every month. So at the end of the year, you've earned a reasonable income. How much capital do you need to reach that annual goal? What trading style are you going to use? How are you going to trade, day, swing, or position? Because they are different and they will have different goals. How many stocks or options will you need to trade a day a week? Again, I want to repeat this. Instead of trading by the seat of our pants, you need to know precisely how many trades you plan on putting on that week or month or day. How many points or how much profit after expenses will each trade need to make? How many shares will it take for the number of stocks you're planning to trade? What price range should you use? How does that break down into monthly, weekly, or daily profits? Well, that's a lot of math and a lot of work, and that's why most traders don't bother. Traders often take shortcuts, constantly changing their price range, their lot sizes, percentages, and the whole profits will magically appear. Well, gee, this is only a $10 stock. I'm going to buy 1,000 shares. Oh, this is an $80 stock. I'm only going to buy 200 shares. Wrong. It doesn't matter the price range of the stock. If it's $10 and your plan says that you must trade 200 shares, you trade 200 shares of the $10 stock. If it's a $70 or $80 stock, you trade 200 shares. Percentages don't work. And I will prove this to you. It's an open thing. Any of you that want to talk directly with me, all you got to do is call in. We'll set up an appointment, and I will prove to you, I will show you mathematically. There will be no doubt in your mind that what I'm saying is not absolute fact. As a production engineer, I like things to be easy, straightforward, and simple. So here's what the trade management planner will do. First and foremost, it'll take all the guesswork out of trying to figure out what to trade, when to trade, how many to trade, and where to trade. The trade management planner asks, these are the variables: the amount of capital you've decided to use, your yearly goal. We have to factor, this is a business, we have to factor in the cost. How much brokerage fee are we going to have? What's going to be our losses? You have to put that in, so that you know the gross profit that you have to make, so when you take the expenses out, you have your net profit figure. Finally, you need to break it down into monthly, weekly, or daily, depending on your trading style. Now that you've made decisions, we let the planner work for us. Once you establish your goals, it's time to find out what you want to earn is reasonable and doable. There are 4 primary variables that the trade management planner allows you to modify and manipulate until you have exactly the trading plan you want. The number of symbols to trade at any one time, the number of shares or contracts you'll put on, the price range for the stock options, your risk tolerance, or how much money is at risk per trade. These numbers are changeable until they fit the goal and trading style parameters that you're using, and everyone's different. This will tell you how much stock will need to move to make your income goals based on your trading style, capital, and risk tolerance. For example, let's say, now this is going to shock you. Let's say that you want to earn 100% return on your capital base of $25,000 in 1 year. I think many of you would like to do this. And it's arbitrary what this figure right here is. To earn 100% return, you'd need a monthly income from trading stocks of $2,800 per month or $480 per week. Just multiply 52 times 480 and you come up with 25 grand. The trade management planner also calculates the cost of broker fees and a percentage of loss on trades that go against you. Now you have a realistic set of data to create your plan and reach your goals. Would it surprise you to know that with $25,000 and trading only 2 securities, I'm only putting 2 trades on, they only need to move up or down 52 cents in 1 trading week. Now I want you to really think about this hard. If all I have to do, and there's over 6,000 securities out there to trade, if at any one time when I'm getting ready to put the trade on and I'm setting up for trading, what process would I have to go through to find 2 securities that could move 52 cents in 1 week? Okay? If I have that process, I can make these kinds of return. Once you enter the variables, you know precisely if your income goals are reasonable and doable, the number of shares you'll need to trade, the profit each trade needs to make, the amount of time you'll need to trade, the price range you'll use. Now you're ready to start using the trading process that we're going to talk about right now. So we've set our trading goals. Most trading situations will involve only trading 2 to 3 different stock and or option symbols or indices or whatever security you're trading. So how do we find every time we're ready to put on a new trade the best stocks to trade out of 6,000 listed securities and 2,800 indices? How do we know? How do we find the best two? I'm only looking for two, and I got a whole week to find it, and only two that are going to move 52 cents. And I'll double my money. There's over 8,800 tradable instruments out there, not even counting the tens of thousands of options chains. So how do we find just the best two tradable instruments out of all of this mess? Okay, we have to have a checklist. We adopt the attitude that we're looking for every reason not to trade. We don't look for reasons to trade. If we look for reasons to trade, emotion kicks in and we'll take on weak trades. We're a python, and we're not going to drop down on some weak stock. We're only going to trade the best of the best. Are we going to find that every day? No, but we certainly are going to find it during the week. So the first thing we do is you run your MetaStock explorations. We sort through 6,000 stocks to find the best tradable stocks at that time. This is the list of scans. We're short of time. I'm just going to move on. We're going to look for position trading scans. If we were swing trading or day trading, we'd be running those explorations. So on a given day, we run the explorations, and already out of 6,000 possibilities, I'm down to 65. Okay, on a typical day, you'll get between 40 and 100 securities that will meet the exploration criteria. It's too many to trade. The risk is too high. We don't trade. We have to have another method. We use the candles, and they're not the Japanese candles. In our Japanese rock garden, every rock has a different name. What Martha has uncovered is that there are very few candle patterns. They're very easy to learn. There's only 4 on the long side and only 4 on the short side. And these are the Western version of the candle patterns, and they're extremely reliable. If we were looking at 40, in this case 65 different charts, take just a second to imagine how long it would take you to go through 65 charts just looking for an entry signal. Time's up. It would actually take you at about the end of 2 weeks, about 8 to 12 minutes. This is not a large time-consuming event. We're only looking for an entry signal. And when we look for the entry signal, only about 15 to 25 charts are going to come up. It's too many to trade, very high risk. We don't trade. So now we apply the indicators. And you'll see why the dark pool activity is going to be so relevant at this point. There's 2 schools of thought. There's the candle traders and there's the indicator traders, and both are wrong. You use the candles just to try to find suspects, but then you confirm those suspects, and I will show you a specific example with the indicators. Here's an example of the indicators. We teach you 5 hybrid indicators that lead price using all 3 pieces of market data. It means the indicators confirm the entry before the stock moves. They're easy to learn. And here they are, and this is the one we're going to show you. There's the candle entry pattern. It's consolidation with a breakout pattern. In any consolidation, only 2 things can happen. The stock's either going to move up, it's going to move down. There's no other activity. No consolidation tight lasts more than 15 to 20 days, and that's very rare. Normally they're 5 to 7 days. So we know this event is going to happen. So how do we know when to trade it? Well, we apply the indicators. In this case, we see dark pool activity moving in. Okay? When the dark pools are moving, we want to move in right with them. And so the dark pools are confirming the event. Now you'll see why just straight candle traders lose out. Here's a very strong entry signal, and yet we see that the dark pools are actually selling off. They're moving out. Do we want to enter a stock that the large money is moving out of it? No. And so it's by using the candles confirmed with the indicators that we're now only down to 5 to 10 tradable securities. But it's still too many to trade, still too high a risk. We now use trading calculators that will calculate the risk of the trade. And if I only need to find 2, and I have 5 to 10 suspects at this point, obviously I'm going to put the trade on with the 2 that have the lowest risk and the highest return. It only makes sense. And so what I've done on any given day is I've got a process that I go through 6,000 tradable securities to only find 2 to trade that have to move up 52 cents in a whole week, and I'll double my money. And for you scoffers, and I think that there'll be a large audience share that will do that, we have one of the highest reputations in the industry. When you deal with other people's money, they get angry very quickly. I think that, and Jeff will confirm this, you can't get any higher reputation than we have in the company. We don't make unprovable statements, period. So when we run the trading process calculator, we're now down to the 3 to 5 that are tradable, and here, of course, I'm only looking for 2, so I would only pick the 2 that have the lowest risk with the highest return. We're running out of time. I won't talk much about this, but we also then use the calculator to tell us whether to stay in the trade or to exit the trade if the trade is moving with momentum or velocity. So just a very quick review. We start with 6,000 stocks. We use the trade management planner to tell us how many securities to trade. We use the explorations to find and to boil down the 6,000 stocks to less than 100. We then look at candlestick patterns to weed out this less than 100 down to less than 25. We now apply the indicators to make sure and to weed it out further, and we end up with less than 10. We then take and run the risk analysis to end up with only the 1 to 3 that we need to trade. So now we have a small list of stocks with an extremely high probability in moving in our direction, either up or down. We use the trade maintenance analyzer to manage the trades once we're in the trade. So this is how you trade stocks and options profitably. This is the course. If you're happy with meager profits and a low percentage of successful trades, and I'm just being very candid, then just keep on doing what you've been doing. If, however, you're serious about stepping up to professional level trading as a career or business for high income, then do visit our website. Study our courses. We customize each course based on what you already know and how you want to trade. Our courses are modularized and follow a semester format like a college. We've created custom tools for each different course exclusively for MetaStock users. And this is what it's all about. It takes 3 things to be successful in the market. And I don't think anybody can argue with this. You've got to have the knowledge. So the knowledge comes as 6 modules. Here's the workbook. Here's the DVD. You do it at home. You're comfortable. You do it at your own pace. When you finish the training, you take the test. Make sure you know it before you go to the next module. And you work through until you get all of the book knowledge. You're far away from live trading yet. The next thing that we do is we give you the tools. It's the most extensive tool set available. Give you the planner, the charting software, the explorations to find stock, the candle patterns, the indicators, broker orders, and your calculators. We then put you on a simulator and you practice trading everything that you've learned here, and you don't go off the simulator. This is where our one-on-one hand-holding comes on, our coaching. There's no limit to it. There's no additional cost. There's no time limit. And you do not go off the simulator and start live trading until you hit a 75% success rate. Okay, I don't think we're going to have time for questions, but we do have a special offer. All you got to do is pick up the phone when you're ready. You get a free consultation one-on-one. We'll actually go through how to set up your trading plan. We have counselors. We don't have commission salespeople. We're just like a college. Here's the places to call, and we're done. Jeff?
Here I come. You okay, Howard?
I'm okay.
All right.
I can take some questions, or we can end depending on what you would like to do.
Well, I don't see a lot of questions coming through, but you're the last speaker, so we can. So we definitely can ask. I mean, we can definitely spend a couple extra minutes. We're not going to be cutting into somebody else's time. So I did see a question from Elliot. I'll go ahead and ask it to you. With the $25,000 account, about how much would you place on each trade?
580 shares.
Okay. And the simulator, somebody's asking what software.
Or six options contracts.
Somebody's asking what software you use for the simulator, but I think it's something you've built in-house, isn't that right?
It's a combination of brokers that we're working with, and so depending on what broker they're using, we don't care what broker platform. We'll have our recommendations, and part of our job is to give you the very best tools that are available. And the broker is extremely important, and we'll give you advice in where you should go.
Okay. Well, other than that, let's see. There was let's see. Okay. There are quite a few people asking for kind of the range of prices for the different courses.
Our introductory course is $295.
Not too bad.
And the top end course that takes you from A to Z is $24.97.
Okay. Also, not too bad. All right, very good. Well, Howard, thanks for coming in today. Really appreciate it.
Okay. I guess I will terminate my side of things then.
Okay. Thanks for coming, and we'll see you. We'll see you again soon.
And thank you, everybody, very much. I know that at this point, why fatigue is in. It's kind of like going to a trade show, and you start at one end of the trade show, and by the time that you get to the other end of the trade show, you've forgotten everything you've seen. And frankly, I enjoy being in the last spot because we're the last exhibitor in the trade show. So do visit our website. We're happy to talk to you.
And the course, this is just for Scott, because I know the answer to this already, but the course includes risk management and how to manage risk and stuff like that.
Absolutely.
Cool.
Absolutely.
Awesome.
We have, just taking a second, we have many stockbrokers that have taken the course. That many people. We have many funds managers that are students of ours. In fact, on our website, we have one of the leading market makers that's currently available, Catherine. is a student of ours. So we range the gamut from the professional side, floor traders, all the way through market makers, to many, many military, many medical, many truck drivers. They love to listen to the course while they're driving. So give us a call.
Deepak, he did answer the question about price. The introductory course is $295, and you can get everything from A to Z for, I think you said $2,495. Is that right?
$24.97.
Oh, oops. Well, you just got a discount for the summit, $2. All right. Very cool. Well, thank you, Howard.
All right. Thank you. Bye-bye.
Bye. All right. Thanks, guys. Let's see. Wow, what a great session today. Give me just a second here. We usually do spend a few minutes answering any questions you've got about MetaStock and doing a little bit of a Q&A around MetaStock. And usually it's pretty informal. Let me go ahead and just switch the presenter over here to me. Okay, and we'll just pick up right where we left off. What a great session today. Hope you enjoyed it. Really appreciate the nice comments about the session. I just love these events. They're so, what a great way. It is a little bit tiring though, so we're going to kind of keep it a little bit fun for the last part. Again, we had some of my favorite plugins on today. So there was Vince Vora, there was Steve Bigelow, Barry Burns, Chuck Hughes, and some good savings for them. Buy one, save $50. Buy two, save $75, or buy three, or more, save $100 each. All of the purchases include the 2-year subscription to Stocks and Commodities magazine. And you can give us a call at 800-882-3040. I know the phones have been pretty busy during the day, and they're not right now. So if you'd like to, it's a great time to call 800-882-3040. We do offer the 3-month extended trial to our award-winning MetaStock program, and it's only basically $59 a month for the DC, which is an hourly updating daily chart, or RT, which is a full-blown real-time application with broker quality, institutional quality news that comes with it. That's $250 for 3 months. You can call us at 800-882-3040 or go to metastock.com/summit. And again, you should. Find out for yourself why it's been rated number 1 25 years in a row. So, is there an email I should send an email to? If you want to send an email relating anything MetaStock, John, you can drop me a message, and I'll either answer it or get it to somebody that will real quickly. Jeffrey.gibby@metastock.com. I'll send that out to everybody. Joe says great program, lots of stimulating material. Trey says, I could go for another 8 hours. Well, that's tomorrow's session, Trey. We have another 8 hours lined up for you. Just kidding. You're welcome, Bern. Richard says he's learned a lot. Thanks. I'm glad you came. I'm glad you learned a lot. I should give away a free MetaStock package to a lucky presentation diehard. Well, maybe we'll talk about that. I definitely would need to get permission for that, but that doesn't sound like a bad idea. The offer, okay, so just to kind of go back, a question about how long the offer is good for. Let me go back one screen here, previous, or two. It's actually, actually I don't have an official deadline, but we are going to wrap it up in like 2 or 3 weeks. The real kind of deadline is a soft deadline. On Tuesday, May 3rd, I'm going to sit down with all of our new customers and all of our new customers of add-ons, and we're going to go in and we're going to do a boot camp, and I'm going to show you from A to B to C to D, how to run your add-ons, how to run scans in MetaStock, and we'll do a full-on session on Tuesday, May 3rd. That's 4 o'clock my time. We're in the Rocky Mountains, Salt Lake City, Utah, to be very precise about it. So that'll be 6 to 7 Eastern or New York time. Bern, thank you. We look forward to talking to you then. Richard asked a question, are Howard's indicators available in the MetaStock software package? Yes, they are, but they're part of his indicator training course, so they come as part of that course package. You're welcome, John. I'm glad it was very, very helpful for you. You're welcome, Al. Stan, have a great weekend. Thanks for coming. Okay, So talking about MetaStock, a question about the MetaStock pricing and how much it costs and stuff like that. So what I've got listed up here for you, James, is the lease price of MetaStock. So this is like an all-inclusive price. You pay $59 a month and you get the region of your choice. Those regions are all of North and South America, which includes all of the Canadian stuff. If you're South American, it'll include a lot of the South American markets. There's Europe, Middle East, and Africa is another region that they offer, so it offers all the European stuff. And then there's Asia Pacific. Those are kind of primarily the regions that Reuters offers. So you can sign up and it'll include all those stocks and futures markets. Now, this is the price for the 3-month trial. This is actually the normal monthly cost. What we do is we have you buy 1 month and get 2 for free. There is a purchase option on both of these where you can pay a one-time cost and bring down the cost you pay for the Reuters data down pretty significantly. I would recommend you start out with a trial because it's a pretty good way to try it. But if you decide you're going to be using MetaStock for a long time, I'd recommend you do a purchase option of MetaStock. You can buy MetaStock as a one-time cost. Instead of paying $60 a month, you'd pay normally $4.99, and just for coming to the summit, we'll give you a discount of $50 on that, so you pay $4.49. And then your monthly cost, you still have to pay for a Reuters data feed, but it goes down to about $25 a month. It gets a lot less expensive. The same thing is true on MetaStock RT. MetaStock RT is normally $1,395, and if you basically pay for it as a one-time cost, you'll get $11.95 for your purchase price at the summit. So as a summit attendee, you'll get $11.95. Just remember to kind of mention the summit when you're ordering, and they'll add that to your thing. And that actually brings down your monthly cost of the Reuters data and the Reuters newsfeed to like $150. So my recommendation for you, if you're brand new to MetaStock and you just want to take a look at it, is do the subscription. Pay for a month. Use it until July 23rd. And at that point, once you're making money, once it's you realize everything that's available in it, then you can make a purchase on it. Dwayne says, I'm currently on a 30-day trial that has not yet expired. Can I still get the extra 2 months on the Summit Special? Yeah, give us a call, 1-800-882-3040, Dwayne, and just ask them to tell them that Jeff said to set you up for the 3-for-1. Paul, we look forward to hearing from you on Monday. Let me know if you have any questions. Let me know if there's anything I can do for you. And thanks for deciding to get it. We look forward to hearing from you. We have had a lot of questions about replays. Looks like we have a very good archive. It has not failed yet. So we'll be converting that. It takes a few days for my content team to actually get everything live. We'll have replays available probably like Wednesday or Thursday of next week. We'll upload them to our YouTube channel as soon as I get a go from our content team. I'll drop everybody a message and just say they're available. So that'll be available. Another question that's come up all day, so I'm going to answer it even though it's not being asked right now, is how do I get the bonus offer from Stocks and Commodities or the free DVD from Howard or any of the bonus offers that you signed up during the registration process? This is a really good question. Basically, I'm going to be sending over all of the information to the for the bonus offers that you got to the respective companies. So I'm going to be sending them basically your email address. Watch for an email from them early next week on how to get your bonus offer. And a lot of them just contain the bonus offer. Some of them have you come to the site and fill out a little form to opt in, basically, so they can send you emails. But those will all be delivered early next week. Thanks, Phil. I'm glad you enjoyed it. Al asked a question that's pretty good. Actually, it's very good, Al. Is the DC able to receive delayed data? Yeah, the DC version of the program, it isn't like a 15-minute delay. Basically, it updates once per hour while the market's open. So all of the stuff that I showed you about in my session, like the ability to go scan through securities and find the ones that have an opportunity and stuff like that, you can actually use those during the day. Just keep in mind that you're looking at something that may be up to an hour delay. Susie asked a question. So when I buy, so when I get the MetaStock DC or RT and get one subscription, that's when I get the 2-year subscription to stocks and commodities. That's correct. If you just subscribe to MetaStock, like DC or RT, you'll get a 5-month subscription as part of it. But if you buy one add-on or more, you're going to get a 2-year subscription to Stocks and Commodities magazine. That's a really good question, Susie. Thank you. Trey says, thanks. That was great. Trey, thanks for coming again. Trey is our, I'm going to start giving Trey frequent flyer points for our webinars. I don't know what that means, but he's always here, and he's definitely one of our most active webinar visitors, up there with a couple of them. Don says, does the 3-month trial offer also include a learning metastock.com subscription? No, it doesn't include it, but you can sign up for a 3-for-1 offer with them as well. I think it's like $50 a month. I could be wrong. Call in and ask 1-800-882-3040. It does include a lot of training, Don. Like, it's going to include the boot camp that I'm going to do. It's also going to include that Unleash the Power of MetaStock training that you can go through online as well. So, Daniel says, can we, with RT, can we place trades with the broker? You can, but not through MetaStock. Like, usually what I'll do is when I want to trade, I tab into my, into TradeStation, or not TradeStation, but Thinkorswim, and then place my trades there. So it doesn't do the trading for you, but it's a great decision support tool. And you can use any brokerage that you want, Daniel. You don't have to, it's one of the nice things is we're kind of broker independent here, so you don't necessarily have to fund a big account with us to get our platform. You can just get it. Thanks, Joe. I appreciate the positive comments. I really appreciate your coming today. Blair, you're not sure you signed up for the stocks and commodities offer? Drop me a message so I don't forget. I'll just type in my email here because I guarantee I will forget. But if you send me an email, I will not forget. So just drop me a message here, and I'll make sure that you're on that list. If you guys have any questions for me, or if there's anything I can do to help you, let me know, and I'd be happy to help you. Richard asked a really good question. If I already have stocks and commodities and I buy a product, thank you for your interest, Richard, do I still get 2 years on the end of my subscription? Yeah, stocks and commodities have been pretty awesome, and they will just tack on 2 years to the to your present subscription. No problem, Raj. Glad to help. The boot camp is going to be on Tuesday, Daniel. It's going to be on Tuesday, May 3rd, from 6 p.m. to 7 p.m. New York time or Eastern time. If you can't make it, I will record it and I will send it to you probably on Wednesday. Doesn't take us as long to do 1 hour as it does to do 8 hours. So anyway, that looks like all the questions that are coming in. If you guys have any more, hurry and type them in. The sales guys are still here. They're not terribly busy, but they're going to be here as long as they get phone calls. So if you do have questions, give us a call, 800-882-3040. Again, it's worth trying. You should definitely give it a shot. I wouldn't trade without it. And that's definitely the opinion of a lot of the customers I've signed up over the years. You'll love it. So I do want to spend a second and just thank our sponsor again, Stocks and Commodities, all of our great speakers today, everybody that came. We had a great attendance today, a great amount of registrations, and really appreciate your coming in. And thanks for the good comment, Don. I'm really glad that you thought it was well done and informative. I hope you guys all learned a lot. With that being said, we're going to close up this online trading summit, and I hope you enjoy the rest of your weekend.